Well, good morning, everyone. Welcome to Paints Education. This is our beginning intermediate class. Glad to have you on board. My name is Gary Edmonds. I am the host and instructor for this beginning intermediate class for this quarter. So as we get moving forward and help you get a little bit more comfortable with the things that you are trying to do and trying to implement in your own trading and investing strategies, we'll just part of these classes, and the reason of these classes to help you get moving forward with that and get you feeling a little bit more comfortable with it. But before we do jump in and start for our topic for today, let's go ahead and go through our disclosures. So folks, remember this presentation is for educational and informational purposes only. All investments involve risk, and past performance of anything in the market does not guarantee future results. Unstoppable Prosperity and Charles Payne are not giving investment, tax, legal, or other professional advice. Nobody associated with Payne's educations are licensed, so we cannot and do not give recommendations to buy or sell anything. If you see something that you like in one of our classes or presentations, please make sure you do your own research to see how it fits into your investing strategies. Unstoppable Prosperity retains all titles, interests, and intellectual property rights to the material provided and may not be used without express written consent. The terms Unstoppable Prosperity, Payne's Education, Wall Street Strategies, and other marks and logos displayed on its websites and other communications may not be used without express written consent. Charles Payne's experiences are not typical. His results are not a guarantee of your success. Unstoppable Prosperity is not endorsed by or affiliated with Fox Business. Making Money with Charles Payne is the property of Fox News Network, LLC. Okay, Mark, that's not the type of question that we're going to be doing. This is not the Q&A. So if you want to have something that you're asking specifically about particular stocks, please go ahead and tune into the Q&A classes, and they'll be able to answer those questions. We do have fixed topics that we're going to be doing and talking about today to help us get moving forward here. Okay, so folks, with this, it's a little bio of who I am. Again, you veterans will know me and the other instructors very well. And so for those of you who are newer, you'll get to know us and you'll see how we are going to be able to help you out with your investing strategies and things along that line. Now, our topic for today. Now, again, folks, this we kind of rotate through the topics, right? We kind of try to follow the foundation material on the online course and the material that you can read and see on Payne's Education. And so it's just kind of weird. It seems to me like the topics that I've been teaching in in this class, right, the beginning intermediate classes each week, it seems like we've been kind of getting flooded and with the same type of topics in some of the other classes, right? The intermediate advanced class and some of the workshops and things like that. It happened when we were going over fundamentals, and looks like it's continuing into the technical side of things as well. So we've had a lot of information on the technical side recently. That's not a bad thing, but the more information that you can use will always be very, very helpful. But so this is kind of what we're going to be doing and going over today. In fact, this week and next week, I'm kind of breaking this up into a little bit of a two-part series on technical analysis and getting a little bit more involved with all of this. Now, our class agenda for today, we're going to be going over the technical analysis, and technical analysis part one type of a thing. So we'll go over chart types, candlestick patterns, price patterns, basically, chart patterns or price patterns, however you want to call them. And the reason we're going to be doing this and looking at this, because it can certainly help us get a little bit better feel and a little bit better idea of what we've got going on, and how you're going to look at a chart and maybe give you a little understanding of what potentially might happen, what potentially could be entry signals, or maybe if you're doing some shorter term types of trade, what you could be using for potential exit signals and things along that line. Now, also remember, folks, depending on the strategy that you're using. Now, again, I'm not talking about stocks versus options or anything else along that line, but it's going to be, are you doing a shorter term swing type of a trade, a trend trade, or an intermediate trade? So these things can help us with all of that. Okay. Now, so one of the things that we'll be going over, and I love to do this because I am a very much a technician, a chartist, if you want to call it that. So I love looking at charts. I love seeing how things are working because there's so much information on there to help us out. Okay. Now, so bottom line, folks, you should all be very, very familiar with this. And Gil, yes, a technical geek. I'm glad you put the technical in front of it. But this is the weighting combinations. You should all be very, very comfortable with this. Okay, trading and buy and hold, right? So we're doing trading kind of more on the shorter term type of a aspect. Then most of our focus is going to be on technical analysis. And if we're going to be doing on a buy and hold, we do rely a lot on the fundamentals or the bottom line of the company, right? The numbers and what they're telling us. Because if we're planning on holding something longer term, we certainly like to have stronger types of companies. Okay. Now, before we do jump in and get moving forward, everybody is probably familiar and knows what's going on with, we're kind of in a transition with moving from TD Ameritrade to Schwab, right? And this does include the Thinkorswim platform as well. They moved it from they're moving it from TD Ameritrade to Schwab as well. So my transition, my migration over happened this past weekend. Okay, and I know a lot of you are have gone through the move, and some of you that move went very, very smoothly, and others maybe had some little technical problems and things along that line. So just for me and just the experience that I've had with it, there's been some hits and some misses. Okay, there's been some hits or some misses for me, and so some of the things, and some of the misses were some pretty big misses that just kind of irritated me to no ends. So looks like CM said her Schwab account transferred. Most everything was okay in both cash and paper accounts. Few glitches. Thinkorswim needed to uninstall the desktop version and reinstall from Schwab site. Easy to do. Did lose tools and chart settings, but they said it might get them back for me if I call today. Okay, yeah, yeah. I've been in touch with them, and they basically said, "Oh, too bad, so sad." But one of the things that happened with me, folks, okay, especially with the paper money, and this is where it really kind of with the paper money in the class that I use. I do have multiple accounts that got moved over, and I was using one of my, well, let's just say smaller account paper money for what happened is I'm transferred over to Schwab, and they made it so there's only a one login, so you can log in now. TD Ameritrade did once, and I can access all of my accounts, but I also have the ability to log into other accounts separately, and using different username for that particular account. The move over to Schwab, they do not allow that. And so what happened is that all of my paper money got wiped out. All of my settings, all of my charts, all of my positions, everything is now gone. And they just said, too bad. So I basically had to start over and start rebuilding everything. So that was a little frustrating for me in that situation. So just kind of keeping in mind for you who might be having multiple accounts, might be using, in fact, I was using all my other paper trading accounts to do other things as well. So, and I wiped all of that out. But so for those of you who haven't done the move yet, they haven't moved you through, and you have some other things on maybe multiple paper trading accounts, I'm just warning you, it will be down to only just one paper trading account. Now, I'm not talking about, the IRA and the margin accounts in the one paper trading account. I'm talking if you have 2 or 3 or more accounts, you used to have a paper trading account to all of those, and they wipe all of those out. So, okay, well, Gary, hopefully everything's all right. Sorry, always hate to see the word emergencies on there. Okay. So, Ray's starting over as well. John, so yep. Gary said, analyze tab, missing data and paper trading, but present is live. Oh, and the other thing that was kind of irritating for me is on my live account, my trade history didn't come over all the way either. So that was kind of concerning for me. In fact, they were saying my last trades were in June, and I'm like, I don't think so. But as always with anything, as we make some changes and make some moves, there can certainly be some, issues and things that they didn't foresee when they started to make the transitions. Okay. All right. John says the same things happened to him. Oh boy, sorry. But yeah, so that's what we're dealing with. So when I pull up my paper trading account, I have no positions and things along that line. All right. So let's do this. Let's get moving forward. And with our class topic today, I just wanted to kind of throw some things out there for you, for those of you who haven't had the switch yet, and just maybe give you a little heads up and maybe some things that you might be able to do and plan for if the switch, when you do get the switch. Okay. Okay. So with that said, let's talk about technical analysis today. All right, so basically technical analysis is all about the charts, looking at charts and reading and seeing what the charts are telling us. And so, the biggest thing for us when we look at a chart is we're trying to identify the trend. First thing that chart pops up, right? What's the trend? So do we have an uptrend? Well, again, we know it's higher highs or higher lows is how people will usually talk about that. A downtrend, lower highs and lower lows. And there is a sideways trend, folks, where we have similar highs and similar lows. So why is this so important for us? Because, we really want to try to trade with the trend. We want to trade in the direction the stock's already moving over a period of time. Trying to fight against the trend or swim against the current or buck the trend, whatever you want to call it, can be, well, there are people who do that. They do counter trend trading, but there's not very many people who are successful doing it. Okay, a lot of people try it, but not very many people are successful at it. So if we wanted to take a little bit more higher probability and go in the direction that the stock is already moving overall, this is why that trend is so important for us. We also use it to look at support and resistance levels. Okay. And as I call them, the floor and the ceilings, or the barriers, it's something that's put in the way of kind of causing the stock to stop moving in that direction, whether it's temporarily on a short-term basis or longer term, and causes a change in the direction of a trend or something like that. But also things to remember is that old resistance becomes new support and old support becomes new resistance. So when the price of the stock breaks through those barriers, it acts as the opposite. Just kind of thinking of the office building, right, with the multiple floors on it. You're on the first floor, you have a floor and a ceiling. You go to the second floor. Now that ceiling from the first floor is now your floor or your support. And vice versa. If you're on a fourth floor and you go down to the third floor, the old floor that you were standing on the fourth floor now becomes your new ceiling on the third floor. So stocks with support and resistance work that exact same way. And this is something that if you can pick these out on the stock chart, you can get a pretty good feel and understanding of what's going on with them. The other thing that we use a chart for would be help to identify volume, right? This is how is the stock trade enough shares on a daily basis for us to feel comfortable trading it. Or we can use volume to help us identify potential entry signals. If there's really, good volume, meaning higher than volume than it normally has, or if it has lower than normal volume, these are some of the things that the chart will help you out. Linda says, "Where are your stick figures in the house?" I was thinking about drawing that, Linda, but I did. Maybe I'll draw that. Okay. Other things that we can use: candlesticks and price patterns, candlestick patterns and price patterns. Now, what we have to do, and very important to understand, because everybody will do this. And I'm not talking about everybody and like somebody might and somebody might. No, not everybody will do this. As we start learning something new and as you start seeing things on the chart, we tend to start to make up either a candlestick pattern or a price pattern while we are going into the process and learning it and seeing. So we start seeing them all over the place. And sometimes it might be the pattern that you're looking at, and other times it may not be the pattern that you're looking at. Okay. Now, one of the things that we're going to do and start over and talk about today is going to be the candle patterns and the price patterns. So let's talk about candlesticks. Now, first and foremost, and when I first started trading many years ago, I was using what was called the bar chart. Now, anytime that you pull up a chart nowadays, it seems like everybody's just defaulted to candles. But when I first started trading, I used a bar chart. And basically what a bar chart meant is that there was a little line on the left-hand side. There was a big line, depending on how much the stock moved in a day, that ran up and down, big, if we had a big gigantic range, that would be a very big line. If it was a shorter range that the stock moved, it might be a shorter line. But then we also had a line on the right hand side. Now, lines on the left hand side always indicate the open. Line on the right hand side always indicated the close. And again, the highs and the lows there. Now we're looking at a bar chart. This was considered a bullish day or an up day, meaning that the price of the stock closed higher than it opened for the day. Okay, based off of the open being the line on the left, close being in the line on the right. Now, on the opposite side, again, we have a line on the left-hand side, and then a big vertical line, and we have a line on the right-hand side of the big line. So we have an open up here, and we have a close down here. So this is actually basically a down day or a bearish day. Okay, which basically means that the price of the stock closed lower than it opened for the day. Now, how does this? Now, I used this for quite a while when I was trading, and again, it made a whole lot of sense, fit my needs, and I could see what was going on with the stock. And in fact, when candlesticks were starting to come into popularity, meaning they just moved, they haven't been over here for very long, meaning they've only been in the Western world probably since the 80s, mid 80s, and so they didn't really start to get into popularity until maybe mid 90s or late 90s, as far as that's concerned. So it wasn't a big thing when I first started trading, and so I started this way. When they came out, I still kind of fought against using them because I just thought it was just a little niche type of a thing, and the next big thing that everybody will forget in just a little bit. But once I started taking a look at them a little bit more, it was amazing how much information that you could really see and use to your advantage when you start using candlesticks. So this is when they first started to come out and were more popular here in the Western world. How a candlestick would look in comparison to the bar chart here would look just like this. Now you can still see this view or this version of candlesticks on the Thinkorswim platform, or other charting software might use just the regular candlestick patterns, where every single up day, meaning where it closed higher than it opened, was a green body, and it was just an outline. It was an unfilled body. And then every down day, meaning it closed lower than it opened for the day, was a red candle with a filled in body. Okay, so this is something that people still use, and again, it's very good, very helpful for us to see what's going on, or helpful. And in this view, in this look here, again, it's just closed higher than it opened, so it's still an upward bullish candle. And the one on the right, it just basically means it closed lower than it opened. Now, what happened is a little bit further on, there is some a little bit more adaptation came to the candles in helping us to identify maybe something that's going on a little bit more in depth and detail. So this right here, all the color and whether it was filled in or not is just dependent on that day and that day only. Good helpful information, right? But it didn't really give us a complete picture or a better understanding. So with the kind of the adaptation of candlesticks, they started to create a little bit different viewpoint, or a little bit different view. And so in this situation, now what we can see, if you select to use this new version of candlesticking, it's called, and in the Thinkorswim platform, it's called Candles Trend, where it also will give you a filled in green body and an open red body. Now, just in the regular candlesticks, you don't have every single red candle is filled in and every single green candle is open, meaning not filled in. But with the candlestick trend, we do have a green body that's filled in and a red body that's open. Okay, and so again, what does this mean? A green filled in body, still the same concept, where it actually closed lower than it opened for the day. And the red unfilled body or open body closed higher than it opened for the day. Now, the biggest distinction here, folks, about the color of the candle, and this is what's really more important for us than just what it did for the day and giving it a color based off of what it did for the day. So the candlesticks in the candle trend view will give us a color for the candle based off of where it closed that day in relationship to the previous day. Because in reality, that is more important for us. If it closed higher than the previous day, then it would have a green candle. Now, so that next day, that green candle might have that filled in body or an open body, depending on if it opened or closed higher. Okay, then the open. If it closed higher than the open or closed lower than the open, it would determine if that green body was filled in or not. But again, the colors determine on how it did compared to the closing price of the day before. So that's something that can certainly give us a little bit better in-depth and more information, because if we just use the regular candle, it could give us a bias against something that's not really going on and might not be really happening. And so we'll take a look at this as we pull up and start looking at some of these patterns. Now, folks, I know Greg Edwards just did a technical analysis workshop. I think it was last week, right? I'm sure most of you were able to attend it. If not, hopefully everybody's gone back and watched it. And he did some things on candlesticks as well. And Greg does a fantastic job. And I know he does get in and talk about, oh, this candlestick means this and this candlestick means that and everything else along that line. I'm just going to give things to you in just a simpler type of approach, and how to use it and things along that line. Sometimes when we start looking at one candlestick based off of one day, could give us a kind of a bias that may or may not be that important to us overall. Gil says it's still cross-eyed from that lesson. Yeah, Scott, it was last Friday. Yep, you got that right. So there are really just 4 types of candlesticks, believe it or not. Okay. Does that surprise somebody when I say there's just really only 4 types of candlesticks? So now combinations of candlesticks and things along that line, they can be put together and come up with many, many different patterns. But there's only really 4 types of candles. Okay, and what are they? Well, it's kind of something that has a small body. So if we start over on the left-hand side, right, it just has a very small body. This is the body. Okay. So, what basically means there is not a very big range between the opening and closing price. Then we have the shadows. In this situation, shadows above and or below. Okay. And or below. Now you might hear people call them wicks, try to keep in the theme of the candlestick. Yeah, you can call it whatever you want, but they're really shadows. But a small body. Now, as I have this pictured right here, this is called a spinning top, but it's just a small body. Then we have the classifications of hammer. Again, it has a small body. Okay, but the biggest difference is we have a long shadow either below it or above it for a hammer or some other variations of this type of a pattern. Then we have a doji, and a doji just looks like a cross or a plus sign, depending how wide, how big the intraday move is. But that just means that the opening price and closing price is basically the exact same price. They're very, very close together. See, there's basically no body on the candlestick. And then we have a long body. Now, again, all of these can have, shadows above or below, anything else along that line. But in reality, these are just the 4 types of candles that are out there that can be used to create all the different patterns. Okay. All the different patterns are created by using these, and in some way, shape, and variations and things along that line, will create the patterns that you are going to be using. Okay, now let's talk about dojis, for example. Okay, we just have the common doji, and just showed you on the last screen, right? It's just looks like a little plus sign. Not a very big range for the day, and the high open and close are very, very same. That's what they call a common doji. Long-legged doji is just kind of like the common doji, but just has a wider range between high and lows. So really big stretched out plus sign. And then we have what's called a gravestone doji, where the kind of the open and close or the line that goes through it is down in the lower portion of the day. A lot of times you might see it down at the very bottom, but there could be a little bit of a shadow below it and then a really high shadow above it. And then the dragonfly doji is just flipped around, where the open and close, the body is up at the top for the day. Again, you'll see it often, a lot of times, maybe even right at the very top, and that's a dragonfly doji with a very long shadow underneath. Now, folks, let me ask you this. How many of you have ever heard of a doji as a day of indecision? Okay, yeah, everybody's saying yes. Day of indecision. How many of you believe that when you get a doji that there was no decisions that were made for the day? Okay. So all of you've heard it, that it's a day of indecision. But in reality, I don't like that term. Just because it opened and closed at the very high or open and closed at close to the same price for the day, Doesn't mean that there wasn't any decisions happening during the day. There's decision happening all day long. But when it was all said and done, by the time the market closed, it just closed at a very similar price to where it opened. So the market and the traders basically now are kind of in agreement. Hey, that was actually a pretty good price to begin with. So it wasn't like there was just this day of indecision and people weren't trading or doing anything on it, right? There was decisions happening all day long, regardless if it was a little tiny small range. There was decision making going on all day long. If we had really big, range in between it, there's a lot of decisions going on all day long. Okay. Now, what happens though? Can this be a day of indecision? As I said, I don't like the term, but what happens if the previous day, okay, and I'm just going to do this little common doji right here. What happens if the previous day you had a candlestick that looked like this? And I'm going to fill that in. Okay. Filling that in. And this was the day before. And then this was the next day right here. So is that in reality a day of indecision? If it closed here and then closed here the next day, is that a day of indecision? It's not a day of indecision because they opened it up and traded it lower from the day before. There's a decision in that thought process that, hey, they made a decision that the price of the stock needed to be lower. Or if it was on the opposite, right? The previous candle was like this. It was a green candle, okay? Then closed here and then it closed here the next day. That was a decision that they conscious decision they made to open that stock and trade it higher than the previous day. Now I get the thought process and saying, well, for the day it was indecision because they couldn't push it off of and close it at a different price and when it opened. I can get that, but folks, when you hear the term a day of indecision, it gives you a bias that nothing happened. Okay, that nothing happened, and that's not true. So I don't want you to get caught up in this. Whenever you see a doji, oh, day of indecision, no big deal. That's not true. And Scott says, Beck's question of volume, it doesn't matter if there's a lot of volume or a little bit of volume. If there's a little bit of volume, the traders that were trading it caused it to move in one direction from the previous day. And Linda says equilibrium. Okay, that's maybe a little bit better term. Or they're in they are agreeing. The buyers and sellers are agreeing on the price of it at that point in time. But they do that every single day, whether it's a doji or not a doji. Okay, does that make sense? So what I've tried to do is just kind of you hear these terms, and I'm trying to steer you away from what a term might mean something and it really may not mean something, or might lead you to think of something that's really not there. So Mark, any trade is an agreement, isn't it? Not really. In the sense, well, I guess what you're saying that there has to be a buyer and a seller in that sense, sure. But in reality, the reason the price of the stock goes up because there are more buyers for the stock and there's not enough supply. There's not enough people selling. And so what does the market have to do? The market has to raise the price to entice sellers to come in. Okay. So in reality, there's always this little constant battle going on. And that's the reason the price of the stock goes up and down. There's an overbalance on one side, and the market has to move the price to entice the other side to come in, because the market does like balance, believe it or not. Okay, the market does like balance. It likes to have, equal number of buyers and sellers. So that's what they're trying to do. They're trying to entice the other side to come in to get that balance. So in that situation, we've got balance, right? This is balance, but this is not really a day of indecision. I just thought I'd throw that out there. Okay. Gabe, can it be thought of that doji pricing was insignificant for the day? No, I wouldn't even say that. Because what did it do in relationship to the previous day? If the stock gapped up or gapped down 10%, there's still a conscious decision. So even though the price on the after it opened for the day may not have chosen, but there was a conscious decision, there was significant movement from the previous day, then no. All right. I thought I had another slide on here that it seems to be eluding. I think I put it in the wrong place. I'm just going to go back and check and see if I actually put it on here or not. Oh, wait a minute. I did. Let me do something here really quick. All right. So here's the next slide, just kind of putting some of these patterns together. Okay, like I said, right, all patterns are kind of a creation of those four main candles, right? Spinning tops, dojis, and things like that. Like these are some of the more common patterns, right? Spinning top, hammers, hanging mans, shooting stars, evening stars, morning stars. And again, you can replace some of these with dojis. You really can. You can replace some of these things. Instead of a hammer, right? Maybe you have a dragonfly doji, okay? Or you might have an inverted hammer, which looks like this, which is an inverted hammer. It's still a bullish pattern. Now, one thing that to kind of keep in mind is there are patterns that look very similar. The candlesticks could look identical. You cannot tell them apart if you saw both of them side by side. But one thing to remember, what makes a bullish or a bearish candle, not so much as what it looks like, but where it is in relationship to support and resistance levels. Okay. So if we might see a hammer forming at a support level, we can call that a hammer. We know it's a hammer. But if we see this hammer any other place other than support, it's not a hammer. So it might be a hanging man, or the inverted hammer might be a shooting star, depending on where it's at in relationship to support and resistance. Okay. Now, some of these other patterns, again, this could also be, something like that. Although, there's no such thing as a bearish dragonfly doji, but we probably just call that a hanging man as well. We could have a tombstone doji right here as a shooting star, right at resistance level. So getting a little bit more comfortable with where they are in relationship to support and resistance goes a long, long ways to helping us understand whether it's really a bullish or a bearish pattern. Now, some other things that again, as I said, could be replaced. So, for example, like this evening star, we could have this instead of like a spinning top, we can have that just as a doji. Or morning star, we can have that just as a doji. Okay. Or we can have something that's called a tricross or a triple cross, where this could be a doji, this could be a doji, and then the third day can be a doji. And same with here. Okay. So there are variations of all of these patterns depending on the different things that you were looking at to help us out there. Now, what do these things look like? Now we're going to pull up some stocks. So I'm going to bring up my brand new Thinkorswim paper money platform. Okay. I kind of wiped out all my watch list too. I'm so disappointed with all of that. But anyway, now again, folks, it doesn't matter what you can pull up on the chart as long as you can chart it. Then there are candlesticks that we can use and identify and help us look for things. Now, another thing that I am going to point out, and this is a huge common thing here. I know a lot of you have heard that candlesticks are trend reversal patterns. Okay. How many of you have heard that? Candlesticks are trend reversal patterns. You know, I've talked about this in just some of my regular everyday classes. But if you read any book on candlesticking, right, whether it's from Steve Nisson, the grandfather of candlesticking, bringing it to the Western world, or anybody else who's written any books on candlestick since then, they talk about candlesticks as trend reversal. So one thing to always remember, folks, that if you're a pure candlestick trader, you are a short-term trader. And what do I mean by pure candlestick trader? Is that you're looking at a 1, 2, maybe a 3-day move, and you're calling that a trend. So how many of you think of a 1, 2, or 3-day move as a trend? Right? And if you're looking at buy and hold or a longer term trend type of a trade, then that's not a trend. It's a pullback or a rally, pullback to a support, or a rally to a resistance level. It's not a trend, but a pure candlestick trader is short term by nature. So they are going to look at just a pullback for a couple of days, and they will call that a trend. Okay, so in reality, right, we wouldn't call this a trend. We wouldn't call this a trend. We wouldn't call this a trend or this a trend. Okay, those are just movements inside the overall trend that we are going to be using. So folks, with the candlesticks, we want to kind of refocus. And this is how I like to get everybody to think about it, especially in for those of us who aren't day trading or being very short term or even counter trend trading, is think of a candlestick, not a trend reversal, but a price reversal. Okay, and so I know people are saying, but isn't that the same thing? No, a trend reversal is where you have either something that's downtrending, lower highs and lower lows for a period of time, and then starts and goes into a bullish trend. That's a trend reversal. A price reversal is something that's happened on a shorter period or a shorter term type of a scale. So for example, right, I'm just going to zoom in here. This is a price reversal. The price of the stock comes in, support level, we might get a bullish candle, and then the price reverses, but now is moving in the direction of the overall longer term trend. All right. So that's kind of maybe a little bit better way of looking at candle patterns. First and foremost, where is it forming in relation to support and resistance, whether it's a bullish or bearish candle, and where is it in relationship to the overall trend? It's not a trend reversal, but looking at it as a price reversal. Okay. So it doesn't matter what we look at, right? I'm going to go ahead and pull up so a couple different stocks, and we'll take a peek at these things. So Amazon. So I'm just going to zoom in now, because folks, I want to tell you that sometimes there might be a candle pattern. Sometimes there might not be a candle pattern. Okay, so we got Amazon. I'm just going to come over here. So we have an uptrend on the stock, right? Higher highs, higher lows is going up. Gabe, what is the time to consider it in a trend? Well, what's the definition of a trend? We had a definition of a trend on one of our earlier screens, right? We had the bullish trend, higher highs, higher lows, a bearish trend, lower highs, lower lows, and the sideways trend is similar highs, similar lows. So think of trends as waves, right? Waves, okay? Waves. So those highs and lows can be over a period of maybe a couple of weeks to a month, maybe a little bit longer between those highs and those lows. Everybody will have a different definition of what they will use to determine a trend. Somebody might just consider one higher high and one higher low as long as it breaks through resistance a trend, an uptrend, a bullish trend. Somebody might want to see two higher highs and two higher lows. Somebody might want to see three higher highs and three higher lows. That's not determined by length of time unless somebody wants to actually add that as a component. Okay, somebody might say, I want to see a series of two higher highs and higher lows over a period of a month and a half. Okay, and if they want to put a time frame on there, they certainly can. Okay, so remember that, folks. You can adapt the rules for what you consider to be a trend based off your risk tolerance and what you want to see. And as you start getting a little bit more comfortable with recognizing and reading these things and moving forward with it, then you might start to adapt it a little bit more, because the more you learn, the more comfortable you are, and perhaps what you thought was really risky when you first started doesn't seem quite as risky now that you have a little bit more knowledge or information. But it does work in the opposite way, folks. Something that you didn't think was very risky when you first started out, now that you start to learn a little bit more, you just kind of go like, whoa, why am I doing that? That's really risky. So you will adapt, you will start to change and things along that line. Now, so we have Amazon going up, and then I'm just going to start moving forward day by day. Oh, well, we have a down day, right? A bearish candle, and it starts to move down a little bit more. Oh, so we have this candle here today. Now, what, folks, would we call just this candle right there? And I know for those of you who are maybe a little bit newer to it, may not know what this is, but I know a lot of you have studied candles for a little bit. What might that candle be called there today? So it's a hammer, but more importantly, it's an inverted hammer because it's it's upside down, right? The head of the hammer is at the very bottom instead of up at the very top. So it's an inverted hammer. But folks, is this forming at a support or a resistance level, or not neither? I'm throwing a little extra in here now, right? Is it forming at a support or resistance? What do you think? Well, it says support. Neither. Support. No. Well, which one? Just don't say no. I gave you three choices, but neither, but closer to resistance. Well, so what happens if we do this? Where's resistance level was right here. Then it broke through. Went up, stopped going up, pull back. So is this forming at a resistance, at a support level? Now remember, support's not down here. It's not down here. It's not down here. But remember, we talked about when a stock breaks through a resistance level, that turns into new support. Need next few days, said Scott? Well, for what? What would we need the next few days for? I'm just kind of curious on that. Not saying that we do or don't, but what would we need to see in the next few days? To see if it breaks through or not. Okay, I'm all for that. Now, would any of you have a different opinion of this, let me do this. Let me put this back here. Would any, that's a little high. Would any of you have a different opinion of this, of this candle right here, instead of that looking just like that, it looked like this instead? I'm going to draw it over here on the right-hand side. Would you have a different opinion if the candle looked like that? Michael said yes. Crystal, it would go up. Yes. Yes. Spires one. Yes. Yes, it could go up. Okay. But both of these are hammers. Both of these are hammers. So are we basing how we feel about it solely on the color? Or solely on whether it's an inverted hammer or a regular hammer? Okay. Don't let the color cause you to think it's different than another one. Okay, what if instead of this one I just drew, draw that line back here, what if it looked like this instead? Whoops. What if it looked like this instead? So we didn't have this one, but we had this one instead. Does that make you look at it any differently? Okay. We'll accept the same. So if everybody was saying that this wouldn't be bullish for them, and this would, even though they're both red candles, we need to stop thinking about it in that scenario. We need to start thinking about it in a scenario of, did it break down through support or not? Because on this candle that I drew, it broke down through support, but finally went up and closed above support, where on this candle that we're actually seeing that's on the chart, it didn't break down through support and stayed above support the whole day. Buyers are outnumbering sellers? Maybe, maybe not. But so again, want to be careful of creating biases just because you think something is there that's maybe not really what it's telling us. Now, candles are I mean hammers are generally what they will fall under a one-day pattern. One-day confirmation, that's the pattern. Now, if you are looking for an entry and you are in line of wanting to have a hold or a close above the high of the low day, whether it was the real candle that we see here or this hammer that I drew here, we would wait for the next day to see if we have an entry point. wouldn't we? We would wait to see if we get an entry point based off of what happens over the next day. Hammer or inverted hammer we had. So let's move forward here. Gonna pop this over, boom. Now, if we had a regular hammer, the one that I had drawn, this would have given us an entry point, a bounce. But now, since we have an inverted hammer, do we have an entry signal here? Do we have a close above the high of the low day? Okay, not yet, right? We don't have on this inverted hammer, it did not close to give us a bounce. Now, somebody might say, I'm going to, if I ever have an inverted hammer, I'm going to use a rule that if it closes above the top of the body of the inverted hammer, then that'll be my signal. Again, you can adapt it if you wanted to, as long as you test it and make sure it always works that direction, that way. Now, that's the disadvantage of an inverted hammer. Has a long shadow, as Robert pointed out, has a long shadow up on top that it has to get over. So this wouldn't be, if we're looking for a hold or a bounce for the pure definition, we'd have to wait. And that didn't happen the next day. The next day it did, but it also broke through there with a bunch of volume. So in reality, folks, was this bearish? Did this cause the stock to go down? For those of you who are looking at this as a bearish candle, and this means that the price of the stock had to drop even more, again, we have to tie it together with support and resistance levels. Because if we saw this at a resistance level, that would be a shooting star and give us a completely different feel, a completely different idea of what's going on with the stock. Okay. Now, what about up here? Stock goes up. What do we see here? Oh, that's a really big long arrow that I drew there, but I wanted to make sure that you saw it. What would we call that? Oscillators are not going to tell us anything about a candle. Is that a hammer? I mean, it looks like a hammer. Okay, so other than the color, this looks pretty similar to that right there, doesn't it? Evening star? Probably, maybe not, but I like the thought process there, Mark. At least we don't know about today, but even regardless of what happens tomorrow, it's probably not going to be an evening. Well, it could be, but probably not an evening star. But it could if you wanted to call it that. But so this right here, folks, it looks like a hammer, but it's not a hammer because this is forming at a potential resistance level, not forming at a support level. So that gives it a whole different idea, a whole different view from us. And so there we go. It starts to come down. Now, could that be an evening star? Sure, it could be an evening star. So what does this mean? Let's just say it is an evening star. Okay. Evening star. What does that mean? Price of stock, the trend's going to change? Trend's going to change? The price of stocks is going to go down, meaning that the trend's going to change. It's no longer going to be a bullish stock. It's going to be a bearish and turn into lower highs and lower lows, right? Possibly. Okay. I like your fence sitters there, but again, it's possible. I'll be right there with you. I'll be sitting on that fence. It's possible because remember, every trend has to start somewhere. Could this be the beginning of a downward or bearish trend? It certainly could. So folks, if you're in a bullish trade, let's just say you're in a trend trade or even a buy and hold trade and you see this bearish pattern forming at resistance, is this a sign and a signal for you to get out? Okay, good. I see everybody. who's typing in saying no. And it's not unless your exit rule on a trend trade or a buy and hold was to get out if you have a bearish candle pattern on your bullish trend, or a bullish candle pattern on your bearish trend if you're shorting a stock. Scott, depends on your timeline. No, if well, I said a trend trade or a buy and hold. You probably will incorporate a little bit different strategies for exits with those strategies. Now, if it was a short-term swing type of a trade where you're planning on being in it only a matter of a couple of weeks, then you might incorporate some kind of bearish candle rule to exit. You certainly can. And Scott says, okay, a day trader would bail and profit take. Yep, that's just exactly. Yep, you got that right, Scott. So let's see what this stock did. Okay, I'm gonna go and move forward because this is gonna crash, and we're gonna go. Didn't crash. Well, so maybe the crash is just lagging a little bit. Nope, didn't crash. Oh, but what do we have here? What's this candle, folks? Inverted hammer, shooting star, inverted hammer. Well, I see everybody saying an inverting hammer. Okay. Shooting star. So everybody who's saying an inverted hammer, where does an inverted hammer need to format? Does an inverted hammer form at a support level or a resistance level? It forms at a support level. Shooting star needs to form at a resistance level. Correct? So is this forming at a support level or at a resistance level? Is this forming at a support level or a resistance level? Oh, okay. See, that's just still some the jury's not sold. We kind of have a hung jury on here. Don't know, Fernando. Oh, thank you, Fernando. I'm glad you said it. Don't know. Well, would you call this right here? Where's my cursor? It's down there. Don't want it down there. There we go. What do we call this? Actually, let me move it up a little bit. What do we call that? Resistance? Or maybe even here, we would call that resistance, meaning that the price of stock just kept hitting its head on there, and then it broke through today. Depends on time frame. Nope, doesn't depend on time frame, Scott. We have 3 days where it's actually was a barrier that kept the stock from going up at that level. So if it broke through there, now it didn't have high volume. That might be the little bit of thing that we might throw a little bit of a question mark into here. But it broke through there, so now this is forming at a support level. You could call it a resistance. If it goes up tomorrow, is it resistance? Well, it went up today. On this day, it got above that. So I would call it resistance. Now this candle takes on a different meaning. It's not a shooting star. Now, again, I would have loved to have seen more volume than for me to break it through and feel comfortable. Yeah, this is really breaking through this level. But the fact that it's above it, it's broken through that. This is a bullish candle now in the scenario, in this situation, that it's now above resistance. That turns into a floor, because remember, office building, here we go, Linda, this is just for you, right? Office building, different floors, different levels. If you're on the one floor and you go up to the next floor, okay, this old ceiling is now your new floor. This old ceiling, this old barrier is now your new floor. So let's see what happens. I'm just guessing here, but let's see what happens. Did it stay above it? Does this now that we have a day later, does this change anybody's mind that this actually was a bullish candle instead of a bearish candle? Because in reality, it was a bullish candle because it broke through resistance and was above that resistance level. Again, the only thing that would have solidified it even more is it would have had volume on that break. Mark says it just seems quick. Well, we do not have any say on what how long it's going to take for a stock to move and break through supports and resistance levels. Sometimes it happens very quickly. Sometimes the consolidation happens in a very short period of time. Okay. Now again, I'm giving you a little bit more of an in-depth kind of look at this and reading them type of a thing. Okay. In that it will take some, some time and some practice to feel a little comfortable with it. But start to identify and see all of these things, now you will have a little bit better feel, a little bit better idea of what a candle might mean and what it might be telling you at any given period of time. Okay. Now, other things that you could do to help you feel a little bit better. Let's see, what time frame is this? Where am I? This is June of this year. Kind of interesting. That's kind of when my Schwab says I didn't do any trades after June. Okay. Anyway, I'm going to do this. I'm going to put a level about right here. Whoops, where was I? This was okay, about right here. And I'm going to go out on just a little bit longer term chart here. I'm going to go out on a 2-year chart. Okay. And I think we were right here. Now I have my chart, my line automatically goes over to the right. It extends. But if we're on a longer term chart now, can we see the stock using this same level multiple times that it was right here when we were looking at it? So if I did this instead, zoomed in this, give us a little bit more time, does that change our opinion on whether that was if that was a resistance level or not? Okay, so see again, I was zoomed in on a very short time period when we were looking at this to try to make the candle seem a little bit bigger for us here. But in reality, we will have history to be able to tell us what's going on. John, it doesn't change John's mind. Okay. But we saw that the stock went up. So that had to have been a resistance level, which would have been a support level. So it changes that candle from a bearish candle to a bullish candle. Yes, Lou, it's only a shooting star when it forms at resistance. At meaning at or below that resistance level. What's the name of it when it forms at support? An inverted hammer. And so, see, this is where kind of the mistake or the myth comes in with this. I'm going to zoom in just a little bit closer. Actually, let me do it this way. Boom, right there. Is that, oh my goodness, the price of stock went up and the candle's right there, and it looks like it should be a shooting star because it's higher than what the rest of the chart is showing me. That has to be a bearish candle. But this is the importance of identifying the support and resistance levels and where they are at in relationship to those support and resistance levels. James said I would still wait for confirmation. That's fine. Now, if this, let's just say I'm gonna erase my drawing here. Now, let's just say that the resistance actually was, we identified resistance right there. Or even right here. That now takes on a whole new meaning for us because now this candle is formed at a resistance level. It's not above it. I'm going to erase this one now. Okay. It's not above it. It closed below it. Even though during the day it went up above it a little bit and came back down, but it closed below that level. If that's where we decided that resistance level was, then that would be a shooting star. So important to identify where those levels are at, gives you the meaning of what that candle actually is. Does that make sense? So the shooting star reestablished support. Now, it didn't reestablish it because it could have been any other type of a candle. It could have been a doji. It could have been a long body. It could have been anything. But just for the fact that it got pushed above resistance, that ceiling now becomes a floor. The candle was above that floor. It's on the next level now. That's what caused it to be a bullish candle instead of a bearish one. Jason, in terms of resistance and support, do simple moving averages and such count as well? Sorry if I missed that. Oh, we didn't talk about that, Jason, but that's a good question. You know, if you were using a moving average as support or resistance, then sure. But remember, moving averages only count as a support or a resistance if it's, you know, it can't act as both at the same time. It's either one or the other. So if you have a moving average that's going up, that's support. Doesn't matter if the price of the stock comes below it, like it did here, that's not a resistance now because the moving average doesn't work in that sort of a situation or scenario. The trend or the direction of the moving average tells us whether it's support or resistance. So if the moving average is going up, price of the stock gets below it, it's still support. Even though it's below it, the moving average is still heading up. If it was heading down and it got above it, then it's still acting as resistance. Okay. So that's the only difference with using support, moving averages as support and resistance. They're only directional. They only work in one direction, the way it's moving, and opposite of that, it's not. Randolph, how do you make the overall determination of where it's at? Well, you have to be good at picking out where and seeing those support and resistance levels. Like I said, on a longer term chart, it's a little bit harder when the zoomed in view, right? But on a longer term chart, I showed you how often this this time or this price was used, about 122.50. That price was used as support and resistance in the past. Now, Gabe had a question going back to candles, the color of the candles. Okay, it says, what's a full body green versus Folks, can you hear me? Something just kind of weird happened here. Oh, that was odd and strange. I had like a little glitch there, and all my Zoom stuff disappeared on me. Okay. Oh, wowie. All right. Well, let me do something here really quick. Can you still see my screen? I'm going to share that again. Can we see that screen? Wow, that was weird. That was odd. Okay, so let me check a couple other things here. I think I disappeared for a little bit there, didn't I? Okay. Yeah, probably was just a little Wi-Fi bump. Let me do this really quick here. That was odd. Kind of gave me some flashbacks of last week. We're doing the Payne's perspective. I was teaching it with Greg, and my power went out for the day, and right in the middle of the Payne's perspective, and Greg was good enough to finish it up for me there. But I was hoping that didn't happen. So where am I going with this word? I lost my oh, okay, yes. So so on this one, so this is just the candle. Green body means that it opened at the bottom and closed at the top for the day. Has no bearing, has no relationship to what it did any other day or the day before or anything. It's just looking at that information for that day only. All right. But as I was talking about about having it and changing this to a candle trend instead, okay, now some things will look a little bit different. Some of these candles might look, in fact, let me kind of go over here a little bit. And okay, I'm going to do this. I'm going to take this back to just the candle. Okay. So again, there's good information, but there can be some misleading information for us that will cause us to think something different than what might actually be going on. All right. So what I'm going to point out a couple different candles here. And for instance, I'm going to point out this candle right there. I'm going to point out this candle right there. And I want you to look at it and watch these candles. And even this candle right here, okay, as far as these red ones are concerned. I don't see something, at least on the screen right now, for a green, but for these red ones, okay? So if we looked at these red ones, I mean, we automatically, we the color, or we relate color, red is bad, okay? Red is bad, green is good. Green is like traffic lights. Green, you go through the intersection. Red means that you still go through the intersection, at least around here in Utah. But no, I'm just kidding. Not everybody does that. But if we look at the candles, right, we automatically look and think of red as, oh, it's bad. It's not a good day. It's a bad day. Okay. Oh, and I'm thinking, oh, this one. Let's look at this. Maybe this one. Now, let's not look at that one. Then maybe that one right there. Okay. So I'm going to switch this back to candle trend. And watch what those candles do. Okay. Where were the candles I pointed at? That one right there, that one right there, that one right there. What color are they now? And it would even have been that one right there. They're green. Because on the candle trend, it's not basing the color off of what happened for just that myopic looking day, meaning just what it did open and close for the day. But the color of the candle now is based in relationship to the previous day's candle. All right. Now, you don't need to use the candle trend if you don't want to, but it does give you a better understanding of what's really happening. Because again, if we saw red, we would think, oh my gosh, we lost money, not looking good, but it's a bad day. But then, right, on this day, if we held that stock the day before, we made money on it. We made money on it, folks. So again, you could have whatever style you want, but it just gives you a little bit better information with the candle, on the candle trend, telling you the color of the candle now is based off of how it did that day, but more importantly, where it closed from the previous day. All right. So again, folks, be very careful on basing a decision solely on hey, that's a shooting star. In reality, it broke through a resistance level. This level is at a support level, and is now actually an inverted hammer. But if it doesn't break that resistance and is below that resistance level, then yeah, we can call it a shooting star. And again, I've been focusing just on the quote unquote hammer patterns, but this relates to every single other candle pattern that we have out there. If a bearish pattern is not forming at a resistance level, folks, it's a bullish pattern, but it's not forming at a support level. It's not a bullish pattern. All right. Does that make sense? I mean, hopefully it does. I'm just trying to, give you a little bit different idea, a little bit different thought process, instead of just the shape of the candle, which if you read it in a book, this is the shape of a candle, then the stock is going to do this. Again, if you're a day trader, and very well may. But if we can now combine that with support and resistance levels, then it gives us a much better idea and a much better view of what really that candle is or will be. Mark frowning. Oh, Mark, I'm hopefully confusing people. JB, repeat that. Okay, so I think this is what you're asking me to repeat, JB. Instead of just looking for a shape for a candle and now making a decision, this is what the shape is, and this should be a bullish or bearish candle. If we now combine that on whether it's at a support or resistance level. So if you identify something as a bearish candle pattern, whether it's a hammer or a, excuse me, a shooting star, a hanging man, an evening star, some sort of bearish pattern, but it's not forming at a resistance level, it's not a bearish pattern. So if you think you see a bullish pattern, whether it's a hammer, inverted hammer, morning star, whatever it might be, but it's not forming at a support level, it is not a bullish pattern. I'm not drawing anything right now, Michael. I'm just talking. Okay. If you see a bearish pattern forming at a support level, meaning it's above that support, it's not a bearish pattern. If you see a bullish pattern forming just at that resistance, just below that resistance level, it's not a bullish pattern. So tying everything together on the charts, whether it's candles, support, resistance, the price patterns. We didn't get into price patterns. We'll probably have to do a little bit more of that next week. But again, I want to get this concept down and understand. Most important is that support resistance level. Then look to see what type of a pattern candle you might have that's forming at that support or resistance level to give you a better understanding of whether it's a bullish or bearish candle. And then Tom, yep, I like that because Paul, again, I'm not drawing anything, I'm just talking. But I like what Tom says because I've said this before in other classes. It would just be a regular candle in the trend. You can have bullish and bearish, quote unquote bearish, bullish and bearish in the middle, in between support and resistance. In the middle, it doesn't mean anything. More significance if it's at a resistance level. So let's kind of go back to maybe what we see going on here today. Okay. We have this big green candle, right? So remember, there's four basic candles, formations, four basic candle bodies that all patterns will use to create. Okay. So this is yesterday was a nice up day. Today's a little bit of a down day. Could this be, is this a bullish or bearish pattern, or is this nothing? Now, we didn't talk about this. Maybe you got into it with Greg in the workshop last Friday. But this is forming at a resistance level. This could be a two candle pattern, maybe of a dark cloud cover. Dark cloud cover. What has to happen is this stock today needs to close halfway down the body of this green candle. If it does, it could be that bearish candle, dark cloud cover. So if it doesn't close at the midpoint or lower, then it's not a dark cloud cover. And maybe it might turn into a hanging man, depending on what it does for the rest of the day. We don't know. But we'll have to wait and see. What was this right here? That was a hanging man forming at a resistance level. A little bit more of a shadow up on top than I'd like to see, but again, potential hanging man. And then what we do is we wait for our confirmations. If you, one candlestick patterns, hammers, hanging mans, shooting stars, inverted hammers, you're looking for your bounces, whether it's a Kohold or a Kablode, close below the low of the high day and a bearish one. Then generally we'll wait for the next day to see what happens. Wait for our confirmation. If it's a two candle pattern where we might have a harami, an engulfing pattern, or a piercing line, dark cloud cover. Those are confirmations you have a two candle pattern. There's three candle pattern where it takes three candles to make up the pattern. Those will be your evening stars, your morning stars, your abandoned babies, your tri-stars, something else along that line. Those in and of themselves, three candles, confirmation. Okay. So I know we spent all of our time just kind of talking about candles, but again, my whole purpose with this, I know we were going to talk about chart patterns and price patterns and things like that. I'm going to, since I was planning on doing this for 2 weeks, I'll move that into next week, and we'll talk about that a little bit more with some of the other things that I was planning on talking about, if you're okay with that. Lanny says, I've got a headache. I'm so sorry. Just go get an ice pack, put it and lay down for a moment. Now, my whole point for you today was to really impress upon you the need or the necessity of mirroring or marrying a candle pattern with support or resistance. Because if it's not where it's supposed to be on the chart in relationship to support or resistance, it doesn't really mean anything for us. Now, again, there are other candle patterns you probably heard Greg talk about, like shaved tops and shaved bottoms for that day and things along that line, and it's going to move in that direction if it continues. Again, yes, if it's not at a support or resistance level. And even if it was at a support or resistance level, that support or resistance level is going to be keys in how that stock will move. And then marrying the appropriate pattern candle that we see at those levels. Mark, hard to understand how far back we look for support or resistance. Doesn't matter how far back you look. You can look back 6 months. You can look back a year. You can look back 5 years. You can look back 10 years. You can look back 20 years or more. And now those levels will be relevant to the stock. If the price of the stock today is at the same level it was 25 years ago, it's relevant because the market's like an elephant. It never forgets. And that's all about the the behavioral pillar, the psychology of the traders. And because we are understanding now, looking at the charts, the behavior of the market, the behavior of the traders of that stock, they will use the same levels that were used in the past, regardless of how long it goes. And I know, believe me, I've heard the arguments and told me I'm full of, well, kind of brown stuff before from people. Because they say conditions in the market and the world and everything was different 25 years ago than it is today. Yeah, it absolutely is. But looking at charts, you will see it react. Traders will react to those same levels time and time again. Okay. So I brought up a 5-year chart. Okay. Why did the traders make the stock stop going down there and turn and go back up? It just wasn't by coincidence. It's because they used it in the past. Okay. Used it in the past. And you know what? You can believe me or not believe me in saying that, you know, things are more relevant the closer they are to the current price of the stock. Okay. You know, you can believe whatever you want. But that just helps us understand better, because the more it uses it, the stronger it gets. And it will use it time and time again. That was a COVID drop support, Scott. Which one are you talking about? Whoops. This one or this one back here? That doesn't matter. Doesn't matter that does with COVID. This is where, you know, we got locked. Actually, we got locked down here, right? But if we went further back on the chart, you'd see this same level being time and time again. Buying and selling tendencies don't change. That's right. The longer look back is not as relevant to short-term traders. Well, it certainly can be. What happens if the stock that you're looking at to trade short-term is at an all-time high, or a 52-week high, or a 104-week high, which is 2 years? or low. And maybe on a 3-year chart, you can see that the price of the stock right now is at a resistance level that happened 2 or 3 years ago or longer. That will still be relevant. Still be relevant. Okay. All right. We're going to wrap this up because we've been going on this a little bit over an hour and a half here. Question at 11:22. Lou, do you usually snap at the body of the candle for support resistance? I don't have clarity on the meaning significance of large shadows, intraday fluctuation. Nope. There is no. You can draw wherever you want, whether you want to draw to the body or the edge of the shadows. It's up to you. You can draw. I know people who draw them just to the bodies and ignore the shadows. I know people who draw it to just the shadows. It's up to you. And what do I draw? I'm not in either camp. I draw wherever I get the most support or where I get the most touches. Sometimes it cuts through shadows. Sometimes it cuts through bodies. I draw it where I get the most touches. So you draw it wherever you feel will give you the best thing. 11:22. Mark, I don't know if I saw. Let me just kind of go back up here and check. Because if it was not anything related to our class here today, I'm not going to answer it. But let me see if I can find out what you might be referring to. And I'd say that would be something to be going to the normal or regular. Oh, no, we're not going to answer that. I see the question. You would need to talk with your broker on that. Okay. But that wasn't the purpose of our class here. If you want to try to take that to the stock Q&A session later on today and ask that and see if they might answer that a little bit. But again, if you have IRA accounts, you can't do shorting. Flat out. You can't short a stock in an IRA account. You need margin to do that. If you wanted to try to do option trading, you might be able to do some option types of situations with that, but you can't do shorting. You can't short stocks. Okay. So if you're wanting to short a stock, you're out of luck. You can't do that with anybody. Okay. So let's wrap this up. Randolph back to Schwab. I was required to transition in February 23, and the portfolio performance did not transition from TD to Schwab on actual account. Yeah, that's too bad. You know what? I just don't know. In fact, here we go. I'm going to go my monitor. Yeah, I have nothing in my monitor page. I haven't had a class where we put anything in, so nothing in the monitor tab here. So kind of annoying. And in fact, even my profit loss, one of my accounts, I think it was my IRA account and the paper money account. I think I was up like 35,000, 40,000 on the account this year. That got all wiped out. But anyway, so let's wrap this up here for today. I'm going to probably going to have to get this shared again here. Just one quick sec. And slide. All right, here we go. That's not what I wanted. That wasn't the thing I was on. Let me just really quick. Current slide. Let me do something here. Bear with me while I do this. Got a little power glitch. Got to mess even my slides up here. Okay, so here we go. Next steps. Now we'll talk more about, since we didn't get into price patterns, we'll get into that next week. But for the most part, what I want you to do, start with the watch list, the parking lot, get comfortable with what you have in there, but do your technical analysis, right? Identify your trends, support and resistance. Again, whether you're using something, you can see something in a shorter period of time, and you feel comfortable with looking at that in a short period of time, you can see it, but don't be afraid to go back in time. In fact, we'll look at this a little bit more next week as well, and these longer term support and resistance levels and how the stock will react to those as it's moving, okay? Identify those candlestick patterns. More importantly, where they are in relationship to a support or resistance level. If it's at a support level and you think it's a bearish candle, it's not a bearish candle. If it's at a resistance level and you think it's a bullish candle, it's not a bullish candle. If it is broken through, then yes. But again, it's very relevant to those support and resistance levels on whether you have bullish or bearish candles. Now, we didn't talk about prices. We'll look at that next week, price patterns. But again, practice your trades. And for those of you who are like me, you're starting over in a paper money account. Ouch! It's something that we have to do and put up with. As far as that, I'm in the process again, like I said, rebuilding all of my things from my now gone paper money accounts. But yeah, well, I'll get it there. But again, folks, thank you. If you have more questions concerning anything other than what we've talked about, or even if stuff that we talked about, reach out and go to the daily Q&As. You can contact us there at the EDU support. But thanks, folks. Have a great rest of your day on your hump day. This is Wednesday, right? I look forward to seeing you in upcoming classes throughout the rest of the week. So take care, everybody. Bye-bye now.